Yes, people, good morning, good afternoon, good evening to all South India students. How are you? Hope so you are good. I'm also good. So guys, today we are going to start with one topic, that is tax audit and ethical compliances. So basically this topic earlier was part of your audit subject in the group 1, but now guys, this is the part of audit, this tax audit. Now it is a part of the income tax, that is paper number, your international taxation and direct tax. Paper number 4, I think. Yeah. So now this is the part of paper number 4 in the second group. Earlier it was part of your audit paper. Now why ICI has included in the income tax paper? Because tax audit is basically related to the income tax, only income tax, because there are various clauses and all clauses, maximum clauses are related to the direct tax. That's why they have included this topic in your paper number 4, that is direct taxation and international taxation. Now question is that, sir, this particular topic, what is the weightage of this topic in examination? So guys, this topic will cover approx 2 to 4 marks in your examination. So 2 to 4 marks, either 2 marks if any MCQ they ask, then 2 marks. Otherwise, if any descriptive question, then 3 to 4 marks may be covered in your examination. Now, let's start with this topic. This topic is a very easy topic. In this topic, what you have to do, just you have to read from the compact, and along with that there are 7 questions given by the ICI. We have included in our compiler that all 7 questions are relevant for your examination, and just remember all that 7 questions. I'm expecting that in your examination May November 2024, out of that 7 question only you will get at least 1 question in your examination for the 4 marks. So just remember that 7 questions. Okay, so let's start with the tax audit. Now guys, tax audit under PGBP, you know that we have discussed one section 44AB. 44AB is a compulsory audit of books of accounts. Means when any person required to audit their books of accounts under income tax, if you remember, then you know that we have discussed that if your turnover is more than 1 crore in case of business, and in case of profession, if your gross receipt is more than 50 lakh, then your books of accounts are required to be audited by chartered accountant, and audit due date is a 1 month before the due date of return filing. So suppose your due date of return filing is 31st October, then your audit due date is 30th September. If your due date of return filing is basically 30th November, then audit due date is the 31st October of assessment year. So this section 44AB we have already covered in our PGBP topic also. But now here we will revise this section. What the section says, pay attention. So following person are required to furnish the audit report by 1 month before the due date of return filing, in prescribed form, and guys there are form are 3CA, 3CB and 3CD. When 3CA, 3CD is applicable and when 3CB, 3CD is applicable, I will explain you in the later part. Now when audit is mandatory, so guys, in case of the profession, specified profession, if your gross receipt in the previous year, so in previous year means current year, financial year, in your previous year, if your gross receipt from the profession is more than 50 lakh, then your books of accounts are mandatorily required to be audited by the chartered accountant. Now, in case of a specified profession, here guys, profession means, if you remember in the section 44AA, profession definition is given, that is the male fit co. If you remember that I have mentioned male fit co. Now, what is the meaning of male fit co? M means medical means doctor and all. A means accountancy and architectural, L means legal consultancy, E means engineering, F means film artist, I means interior decorator, T means technical consultancy, and CO means company secretary. So basically they are covered in the specified profession. So in case of a specified profession, if your gross receipt of profession is more than 50 lakh rupees, then your accounts are required to be audited. Now in case of the business, remember here in case of business means other than specified profession, that is called your business. So in case of your business, if your turnover or gross receipt in the previous year is more than 1 crore rupees, then your accounts are required to be audited. Means your turnover or gross receipt is more than 1 crore, then your accounts are required to be audited. But guys, you know that if you remember, I have mentioned that now Nirmala Sitharaman ji don't want to give more work to the chartered accountant. So Nirmala Sitharaman ji says that if 2 conditions are satisfied, then this 1 crore limit will be raised to the 10 crore. If 2 conditions are satisfied, then instead of the 1 crore limit, we will check the 10 crore limit. Means instead of the 1 crore limit, we will check the 10 crore limit if two conditions are satisfied. Now, what these two conditions are? First condition, whatever the gross receipt in the previous year, gross receipt means every receipt, whether it is a capital receipt, revenue receipt, turnover receipt, every receipt. So out of the gross receipt, cash receipt should be within the 5% limit, means should be within 5% of the total receipt. And guys, in your total payments, whatever payments you have made, in that total payments, your cash payment is within the limit of the 5%. If both the conditions are satisfied, then instead of the 1 crore, we will check the limit of the 10 crore, means here limit of the 10 crore is applicable instead of the 1 crore. So again, try to understand what I am saying, that all people pay attention. First is, in case of profession, if your gross receipt is more than 50 lakh rupees, your accounts are required to be audited. Second is, in case of the business, if your turnover or gross receipt is more than 1 crore, then your accounts are required to be audited. But guys, instead of the 1 crore, that limit will be the 10 crore if two conditions are satisfied. First is, in your total receipt. I'm not talking about total receipt of turnover, every receipt. In your total receipt, your cash receipt is within the limit of 5%. And in your total payment, cash payment is within the limit of the 5%. If both the conditions are satisfied, then guys, instead of the 1 crore, we will check here 10 crore limit. So what here written, please pay attention. In case of business, the turnover limit shall be the 10 crore instead of 1 crore if cash receipt out of total receipt is up to 5% during the previous year, and cash payment out of the total payment is up to 5% during the previous year. Both the condition, because here they mention about the end means both the conditions are satisfied. Now question is that here they use the word cash. So question is that, sir, is bearer check, cross check will cover in the cash or not? Answer is yes. Because here they mention if there is any check or DD which is not a account pay check shall be treated as cash only. It means if there is a bearer check or cross check, that will be treated as your cash only. Because other than cash will cover only account pay check, account pay demand draft, or any mode of electronic clearing system. And any mode of electronic clearing system covered debit card, credit card, net banking, Bhim UPI and QR code. And net banking include NEFT, RTGS, IMPS. So that is covered in the electronic clearing system. Guys, if there is a bearer check or cross check, that will be covered in the cash only. Now, C part is a special cases. Now guys, in this cases also, assessee is required to audit their books of accounts. First is, assessee claiming the lower income under section 44 AD or 44 ADA and his net taxable income is more than basic exemption. If you remember 44 AD and 44 ADA, 44 AD is that 8% of turnover is your PGBP income, 6% is your PGBP income. And 44 ADA is in your gross receipt, that 50% is your PGBP income in case of profession. And if you are declaring the lower income is less than 8%, 6%, 50% you are declaring, and your net taxable income is more than basic exemption, then accounts are required to be audited. Then tax audit is applicable. Now one more point, if assessee claiming the lower income under section 44 AE, 44 BB and 44 BBB. Now 44 AE, if you remember that transportation business, if transporter is not having the more than 10 trucks, heavy vehicle and light vehicle and all, you know that, then their presumptive income was there, like for the heavy vehicle there is a 1000 rupees per month for per ton, and for the other vehicle just take the 7500 per vehicle per month or part of the month, that is 44 AE. If assessee is declaring lower than that income, or 44 BB and 44 BBB. If you remember, 44 BB is related to if non-resident is providing any plant and machinery or providing service for the extraction, exploration of the mineral oils. You know that I have mentioned about the rig machine, rig machine means they always like extract the crude oil and all. So if any non-resident is providing the rig machine and all, then their income, PGBP income is 10% of amount received. And 44 BBB is related to the turnkey project. turnkey project means that big civil construction related project. If non-resident is doing that type of activity, basically 44 BBB is related to the foreign company only. If foreign company is providing that type of turnkey project related service, then their income is a 10% PGPP income. And guys, under this section, if assessee is declaring the lower income, then their account are required to be audited under section 44 ABA. Now, tax audit, when tax audit is not applicable. So in two cases, tax audit is not applicable. One is if any person declared the income as per section 44 AD or ADA. Now guys, 44 AD and 44 ADA, if assessee declared the income as per 44 AD or 44 ADA, then there is no need of audit. 44 AD means if your turnover is up to 2 crore in case of business, and guys, if you are declaring the income 6% or 8%, then there is no need of audit. Even your turnover here is more than 1 crore, but if it is within the limit of 2 crore, and in some cases it is 3 crore also, there is an amendment by Finance Act 2023, then guys, there is no need of any audit. And second is, if any person is having the income referred under section 44B or 44BBA. 44B and 44BBA is related to that. You know that non-resident is flying the aircraft and shipping business. That income is specific. That income percentage is 7.5% in case of shipping business and 5% in case of the aircraft business. So income is 5% or 7.5% if you declare, then obviously there is no need of any audit. So what I am saying that a person deriving income of the nature referred in section 44B or 44BBA, then there is no need of any audit. Now next part. If you have not audited your books of accounts, then guys, there is a penalty under section 271B. And this penalty, always we tell to our client that penalty is 1,50,000, but it's not exactly 1,50,000. If assessee fails to get account audited, then penalty is a 0.5% of turnover or gross receipt or 1,50,000, whichever is lower. So 0.5% of turnover or gross receipt or 1,50,000, whichever is lower, is your penalty. So what I'm saying that penalty applicable under section 271B. If assessee fails to get account audited, then 0.5% of turnover or gross receipt or 1,50,000, whichever is lower, is your penalty. You got my point or not? Yes. Now guys, before starting the next part, we are going to revise the section 44 AD and 44 ADA. So just check section 44 AD and 44 ADA that is given in your PGPP topic. So after 44 AB, there is a section 44 AD. Now what section 44 AD says? Pay attention. Section 44 AD is your 8%, 6% section. That section says that if there is a resident individual, resident HUF or resident partnership firm, but other than LLP. Guys, that section 44 AD is not applicable for LLP, other than LLP, who has not claimed any deduction under section 10AA or 80IA to 80RRB, means they are not claiming any income based deduction. And this section is applicable for any business only. 44 AD is applicable in case of business only, not in case of profession. As well as it is not applicable in case of 44A business. So if there is a transportation business, then 44A is applicable, 44 AD is not applicable. In case of agency business or commission and brokerage business, guys, 44 AD is not applicable. And 44 AD is applicable only if your turnover or gross receipt is up to 2 crore rupees. Means your turnover or gross receipt is up to 2 crore rupees, then only this section is applicable. If your turnover or gross receipt is more than 2 crore, then this section is not applicable. So what I am saying that here, try to understand all people. This section is applicable in case of resident individual, HUF partnership firm, and you are engaged in the business. But guys, business, this is business, but other than 44 AE business, other than agency business, other than commission and brokerage business, and turnover is up to 2 crore rupees, then only this section is applicable. But guys, there is one amendment. And you have to check this amendment. And you have to remember this amendment, because in examination, ICI will cover this question. There is one note is given. Note says that where the amount received during the previous year in cash, means amount received during the previous year in cash does not exceed 5% of total turnover or gross receipt of such previous year, then limit of 3 crore apply instead of the 2 crore. So guys, here they are talking about only turnover, means out of the turnover, amount received in cash is within the 5% limit. Then guys, this limit of 2 crore will be raised to the 3 crore. Here they are not talking about all the receipt. Guys, under section 44AB, if you remember, they mention cash receipt out of the total receipt. Total receipt means any type of the receipt. But here they mention like here cash receipt is within the 5% of the total turnover, means out of the turnover cash receipt is within the limit of the 5%. Cash receipt is within the limit of the 5%, means here out of the turnover only. Here out of the turnover only. You got my point or not? Yes. Other point are like you remember that 8%, but if it is realized in the account pay check, account pay demand draft, any mode of electronic clearing system up to the due date of return filing, then instead of 8%, you have to take the 6%. After that, guys, there is a one more section, 44 ADA. 44 ADA says that profit and gain of profession on the presumptive basis for the professions. So if you remember, this section says that if your gross receipt is up to 50 lakh, then your PGBP income is gross receipt multiplied by 50%. But guys, there is a one amendment, instead of this 50 lakh, you can take the 75 lakh if gross receipt of profession does not exceed more than 5%, does not exceed 5%, then you have to take the 75 lakh instead of the 50 lakh. Means in your gross receipt from profession, cash receipt is within the limit of 5%, then instead of the 50 lakh, you can take the 75 lakh. You got my point or not? Yes. So this is the 44 ADA. Now guys, directly check your compiler, and first we will do two questions, because first two question is based on this only. So all people check compiler, and in compiler, first check the question number 1. Test your knowledge. Check first question, Sunlight and Company. All people pay attention. Question number 1. What this question number 1 says? Pay attention. Question number 1. All people focus here. Question number 1 says that Sunlight and Company is a partnership firm. So there is a partnership firm engaged in the trading of electronic goods. So basically they are engaged in the business of trading business, and has turnover of 265 lakh for the financial year 23-24. 265 lakh means 2.65 crore. So 2.65 crore is a turnover. Since turnover more than 1 crore, then you have to audit your books of accounts. But 10 crore limit is applicable or not? We'll check it. Is 44 AD is applicable or not? We'll check it. Okay. Examine whether the Sunlight and Company is required to get its books of accounts audited mandatorily as per section 44 AB from the information given below. So on the basis of this information, you have to decide that is they are required to audit their books of accounts or not. Now, total turnover for the financial year 23-24 is a 2 crore 65 lakh. That is your total turnover. Now, aggregate of the all receipt during the year. Aggregate of the all receipt during the year, including the amount received for the turnover mentioned in above. So including this turnover, guys, their total receipt is a 3.25 crore. So 3 crore 25 lakh is the total receipt, and cash receipt out of one above means your out of the turnover, your cash turnover is 14 lakh, but cash receipt out of the two above, this is inclusive the figure mentioned in the point number 3 above, means including the turnover, your cash receipt means out of your total receipt is 3 crore 25 lakh, and in this 3 crore 25 lakh, your cash receipt is a 16 lakh. So in this 3.25 crore, 16 lakh is your cash receipt. So in 3.25 crore, 16 lakh is your cash receipt. So cash receipt is a 16 lakh out of the 325 lakh. Now aggregate of the all payment during the year is a 1 crore 35 lakh, and cash payment is 6 lakh 95,000. Now second answer we will check later. So guys, first point is audit is required or not? Normally you can say that if your turnover is more than 1 crore, then audit is required. But you know that instead of the 1 crore, we will check the 10 crore limit if two conditions are satisfied. First condition is like in your total receipt, cash receipt is within the limit of 5%, and in your total payment, cash payment is within the limit of 5%. So let's check that in total receipt, your cash receipt is within the limit of 5% or not. So here your total receipt is 3.25 crore. And in this 3.25 crore, your cash receipt is a 16 lakh. So just check what is the percentage of cash receipt. So here in your total receipt of 16 lakh divided by 3 crore 25 lakh multiply by 100. So it comes to the 4.92%. So 4.92%, it means it is the within the limit of 5%. Now check in the payment. So here guys, in your total payment, 6,95,000 divided by 1 crore 35 lakh multiply by 100, it's a 5.148%. So here guys, it crossed the 5% limit. So here this crossed the 5% limit. This crossed the 5% limit. It means your turnover limit for audit is only 1 crore is considered. And here your turnover is more than 1 crore, so audit is required. But now second question is, can assessee take the 44AD benefit or not? Because if 44AD section is applicable, then there is no need of audit. So now we'll check that is 44AD is applicable or not. And guys, for 44AD, that turnover limit is a 2 crore. But here it is a more than 2 crore. But guys, 3 crore limit is applicable if in your turnover, cash turnover is within the limit of 5%. So here guys, what is your turnover? Your turnover from business is 2 crore 65 lakh and your cash turnover is 14 lakh. Your cash turnover is 14 lakh. So here, if you check, then guys, try to understand. Your 14 lakh is your cash turnover. And guys, out of 2 crore 65 lakh, so just check 14 lakh divided by 265 multiply by 100, it's a 5.28%. So it's a 5.28% and 5.28% means it's crossed the 5% limit. It means guys 44AD is also not applicable. And when 44AD is not applicable, it means you required to audit your books of accounts. So your conclusion will be that yes, assessee is required to audit their books of accounts. Now here's one question more. They ask one more question. Yeah, would your answer change if the cash receipt indicated in point number 3, that is in turnover, your cash turnover is a 13 lakh instead of 14 lakh? So guys, if instead of the 14 lakh, if this turnover received in cash is only 13 lakh, then just check 13 lakh divided by 2 crore 65 lakh multiply by 100, it's a 4.9056%. So instead of 14 lakh, if it is a 13 lakh, then guys, here it is only 4.90. It means now for the 44AD, your turnover limit will be 3 crore. And here turnover is only 2.65 crore, means here 44AD assessee may opt. And if assessee opt the 44AD, then there is no need of audit. You got my point or not? You understood my point or not? Yes. So just read answer of first question and after that read question number 2. I'm going to give you 2-3 minutes time. Read answer of first question and then read question number 2. हाँ जी, done. Now just check question number 2. What question number 2 says that? Question number 2 says, Mr. Abhinav Ahuja runs a travel agency business. So he is running the agency business. Agency means travel agency. Since year 2010, his total commission receipt for the previous year 23-24 is 2.87 crore. So 2 crore 287 lakh is his total commission receipt in the current year, but he is running the travel agency business and his income is in the nature of commission and brokerage. The detail of receipt and payments made by him during the year 2023-24 are as given below. So here receipt as well as payment is given. Now guys, what happened here? 15,65,000 he received through the Bhim UPI. 1380 received through the account pay check. 1335 received through the bearer check. It means, can I say that this is like a cash only? Here guys, bearer check is equal to cash only. Now 18,21,000 is account pay check. 1525 is a NEFT. 1672 is a NEFT. 1535,600 is a UPI. 1625,350 is a UPI, and 1819,450 is also NEFT. So this is account pay check only. Account pay check or account pay demand draft or any mode of electronic clearing system. Now other aggregate receipt not exceeding 2,000 per person on the certain occasion from the various customer. Out of this receipt, 52,500 is received in cash. So guys, this is also by the account pay check, NEFT and UPI, but out of this 50,500 is received in cash. 52,500 is received in cash. So here, out of 1 crore 44 lakh 21,600, 52,500 is received in cash. So this is the detail about all the receipt, and if you aggregate, then it comes to the 2 crore 87 lakhs. Now next part. Payment aggregate, all payment made during the previous year is 2 crore 58 lakh, but amount incurred for expenditure in cash but not exceeding 10,000 per person in each case is 20 lakh 58,000. That is the cash payment. Now Mr. Abhinav contended that he is not required to get his account audited since the turnover does not exceed the 3 crore, and he is eligible to declare his income as per the presumptive provision of section 44 AD, examining the contention of the Mr. Abhinav Ahuja. Now guys, first point is, can he claim the 44 AD benefit or not? Answer is no, he cannot claim the 44 AD. Why he cannot claim the 44 AD? Because that person is engaged in the travel agency business. If you remember, just we have discussed about the 44 AD. Section 44 AD says that 44 AD is applicable in case of business, but other than 44 AE business, other than agency business, and other than commission brokerage type of income. So here guys, he is engaged in the travel agency business. His income is in the nature of the commission. So guys, 44 AD is not applicable. So when 44 AD is not applicable, now question is that is his accounts are required to be audited or not? So his accounts are required to be audited or not? Since his turnover is more than 1 crore, so audit is required to be audited, accounts are required to be audited. But guys, instead of the 1 crore, you can take the turnover of 10 crore if two conditions are satisfied. In your total receipt, your cash receipt is within the limit of 5%, and in your total payment, cash payment is within the limit of 5%. Now just check it. Your total receipt here guys, this total receipt is 2 crore 87 and your cash receipt is 1335 and 52,500. So can I say that 1335 plus 52,500 divide by 2 crore 87 lakh multiply by 100. So it comes to the, here your percentage cash receipt is 4.8344%. This is the within the limit of the 5%. But guys, what is your payment? So here 20 lakh 58,000 divided by 2 crore 58 lakh multiply by 100. So it comes to the 7.9767%. So this is the more than 5%. So here this condition is violated 5%. So in simple word, here turnover limit will be 1 crore only. And since in this particular question, your turnover is more than 1 crore, so you're required to audit your books of accounts. Answer is yes. Assessee is required to audit their books of accounts. You got my point or not? Yes. Just read the answer of this question. Just read the answer of this question very carefully. Yeah? Just read it. Just read the answer of this question. Read it. Yes, people, done with both the question. Now again come to your compact. So here in your compact, first we have discussed that when assessee is required to audit books of accounts. Now guys, next point is some general point. Computation of turnover to determine the eligibility of the tax audit, because tax audit is required if your turnover is more than 1 crore or 10 crore. So guys, how to calculate the turnover? What will be included in turnover and all? So here first is discount allowed in the sales invoice deducted from the turnover. So suppose for an example, one sale invoice is made, and in sale invoice suppose that product price is 10,000 is mentioned, but suppose 10% discount is already given in the invoice and remaining 9,000 is the invoice value. So here in your turnover you will consider the 9,000 or 10,000. Right answer is 9,000. So this is very simple point. Okay, discount allowed in the sales invoice only, that is deducted from the turnover, means here in the turnover you have to consider only 9,000, not 10,000, because 1,000 is discount. Now second point, cash discount not allowed in the cash memo or sales invoice is in the nature of financing charges and not related to the turnover, therefore should not be deducted from turnover. Guys, for an example here, suppose that invoice value is a 9,000. This 1,000 was a trade discount. Here that invoice value is a 9,000, but suppose after 3 months when payment is made, at the time that assessee receive the payment is only 8,500. Means suppose 500 here cash discount also given. So is this 500 will also be reduced from turnover? Answer is no. Here this clarification says that cash discount not allowed in the invoice. If it is allowed in the invoice only, then obviously it is not part of the turnover. But here guys, in an invoice it is mentioned 9,000. After 2-3 months, suppose if you receive the payment, that time you receive the payment only 8,500. So 500 discount is given. So it will be treated as your financing charges. You can debit to your P&L account, but it is not reduced from the turnover. Now next part. Suppose if there is a turnover discount is normally allowed to the customer if sales made to him exceed the particular quantity. As per the trade practice, it is the nature of the trade discount and should be deducted from the turnover. Guys, many times what happens, suppose if your sale is more than such quantity, then you will get some discount. So that is called your turnover discount. So turnover discount will also not part of your turnover. It will be reduced from your turnover. Now next part. Suppose if any special rebate allowed to customer can be deducted from the sales if it is in the nature of the trade discount. If it is in the nature of commission on sales, then it cannot be deducted. So suppose for an example, I can take an example. Our book price is 1,000 rupees. For an example, compact price is 1,000 rupees. When a student came and he says that, sir, I am financially weak student. Can you give me some discount? I have mentioned, okay, no problem. Just give me 600. So here 400 special rebate is given. So my turnover will be the 600 only. 600 only. But guys, suppose if there is a commission and all, then it will be part of your turnover. You got my point or not? Yes. So here, a special rebate allowed to customer can be deducted from the sales. If it is in the nature of trade discount, if it is in the nature of commission on sales, then it cannot be deducted. Now next part. Price of goods written should be deducted from the turnover even if the return are from the sales made in the earlier year. Suppose for an example, your sale made is of 2 crore. Out of that 20 lakh, you receive the sales return. So sales return will be reduced. So 2 crore minus 10 lakh. So guys, here 1.9 crore will be treated as your turnover. 1.9 crore will be treated as your turnover, means sales return will be reduced while calculating your turnover. Even if sale made in the last year, it means suppose for an example, in the current year you made the sale and in the next year there is a sales return, that will also be reduced from the turnover. Now next part. Sale proceed of any share, security, debenture, etc. held as investment will not be forming part of turnover. It's very simple. Suppose if you sold the share, security, debenture or any property and all, then guys, that is not part of your turnover. But suppose if shares or security or debenture is treated as your stock in trade, then it will be treated as your turnover. Na? So suppose if you are engaged in the share trading business, or in the property trading business and all, then obviously that will be covered in the turnover. But suppose if it is held as an investment, then it will not be part of your turnover. So if shared security, debenture, etc. are held as a stock in trade, then sale proceed thereof will be part of the turnover. Now next part. If the assessee having the more than one business, here it is a more than one business, one. If assessee is having more than one business, then all the businesses turnover shall be aggregated for the purpose of checking audit requirement. However, in case of business covered under section 44B and 44BBA, the turnover of such business shall be excluded. For an example, suppose I am doing the three businesses. Means I am selling the books also. Suppose I am selling the toys also. Suppose I am selling some furniture also. So I am having the three businesses. So for audit requirement is all the my businesses, because PAN number is one. So all the business turnover will be aggregated. Answer is yes. So guys, in case of the multiple business, all the business turnover are going to be aggregated. You got my point or not? Yes. Now next part. Guys, tax audit report. So here chartered accountant will fill the form, that is tax audit report. And tax audit report will be in which form? So guys, there are basically three forms. One is the 3CA and 3CD, and one is the 3CB with 3CD. So in both the cases, 3CD is common. Here 3CA and 3CB. Now question is that when 3CA is applicable? Guys, if there is a tax audit of any person whose accounts are already audited under any other law. For an example, for the company. So for the company, accounts are already audited under Companies Act. For the LLP, accounts are already audited under LLP Act 2008. Suppose for an example, cooperative society. So cooperative society accounts are already audited under any other law. Then guys, chartered accountant will fill two forms. One is the 3CA and 3CD. But suppose person accounts are not audited, under any other law, and tax audit is only applicable, then guys, 3CB with 3CD. So for individual, suppose your turnover is more than prescribed limit, your account are not audited under any other law, then chartered accountant will fill the 3CB and 3CD. So in simple word, 3CA and 3CD is applicable when your accounts is already audited under any other law. And 3CB plus 3CD is applicable when your accounts are not audited under any other law, only income tax law accounts are audited. So pay attention. First is a 3CA and 3CD. So accounts of assessee already audited under any other law like Companies Act, LLP Act, etc., etc. And 3CB, 3CD is accounts of assessee not audited under any other law. Then 3CB plus 3CD. Now question is that suppose chartered accountant filed the audit report, and after some time chartered accountant realized that he want to, like assessee inform to the chartered accountant about some disallowance and all, and chartered accountant wants to revise the tax audit report. So is TAR can be revised or not? Right answer is yes. Guys, as per the guidelines note, tax audit report can be revised within the assessment year. Means till the end of the assessment year it can be revised. Guys, when it is required, I can take one example. What is the audit date? Audit date is a 1 month before the due date of return filing. So suppose for an example, chartered accountant is doing audit on 30th September 2024. So on 30th September 2024, chartered accountant will file the audit report. But guys, what happened? You know that under PGBP, there are various sections like 43B. If you remember that Mukhe Nale Kande, the interfering section. If this certain payment, if payment is not made up to the due date of return filing, then that expenditure is going to be disallowed. So if payment is not made up to the due date of return filing, then that expenditure is going to be disallowed. So now what happened on 30th September, it is not possible that you will make the payment till 31st October or not. So suppose for an example, on the 30th September, chartered accountant mentioned that you made the payment, it is allowed. But guys, for an example, till 31st October, you have not actually made the payment, then it has to be disallowed. So tax audit report has to be revised. So it can be revised or not? Answer is yes. It can revise multiple times, but chartered accountant can revise the tax audit report only till the end of the assessment year. You got my point or not? Yes. So here, revised tax audit report. So all people pay attention. TAR, that is tax audit report, may be revised by the person assessee by getting revised report of audit from the chartered accountant and furnish it before the end of the assessment year for which the report pertain. If there is a payment by such person after furnishing the TAR which necessitates a recalculation of the disallowance under section 40 or 43B, tax audit report can be revised multiple times also. Now guys, while doing the tax audit, you have to consider following. So there are some interesting points that you have to consider while doing the tax audit report. This is for chartered accountant. So here, considerations while furnishing the particular in the form number 3CD. If any item of income or expenditure is covered in more than one clause, suitable cross reference to such item to be given at appropriate places. So here first point says that if item of any income or any expenditure is covered in more than one clause, there may be possibility that some expenditure or income is covered in the more than one clauses, then guys suitable cross reference to such item be given at the appropriate places. Now second is, if there is a, this is very interesting because in question they may ask this point, pay attention. If there is a difference in the opinion of the tax auditor and the assessee in respect of any information furnished in the form, auditor should state both viewpoint and relevant information to enable tax authority, income tax department, to decide in the matter. Guys, this is very interesting point and you have to remember this. There may be possibility that there is a diversion of opinion of assessee and chartered accountant. For an example, there is a one expenditure. Assessee says that this expenditure should be allowed, but chartered accountant auditor says that no, it should not be allowed. So assessee says that it should be allowed, chartered accountant says that it should not be allowed. So there is a difference in the opinion. So guys, in the form number 3CA and 3CB, form number 3CA or 3CB, chartered accountant has to mention that. On this point, there is a difference in the opinion. There may be possibility chartered accountant says that as per this case law, it should be disallowed. Now, assessee says that as per this case law, it should be allowed. So there is a difference of opinion. So wherever there is a difference of opinion, now auditor has to report that. Auditor has to mention that in the form number 3CA or form number 3CB. And next part, if any clause is not applicable, he should state with the same is not applicable, obviously. Guys, in computing allowance or disallowance, he should keep in view law applicable in the relevant year. Even though form for audit report may not have been amended to bring it conformity with the amended law. Guys, there may be possibility, still income tax, that tax audit report form 3CA, 3CB, 3CD is not amended, but law is amended, then chartered accountant has to take care about that amendment. For an example, for Finance Act 2023, certain amendment is made, but suppose audit report, that 3CD form is not amended, then also chartered accountant has to take care about the amendment. You got my point or not? Yes. Now next part. Information in form should be based on books of accounts, means he will submit the information in the form number 3CD on the basis of books of accounts, as well as records, as well as documents and information and explanation made available to the tax auditor for the examination. So guys, here tax auditor will fill the form, means tax auditor will do the tax audit on the basis of books of accounts, record, document, information and explanation made available to the tax auditor for the examination. In case auditor rely on any case law, he may mention the fact. Suppose auditor relying on any case law, he has to mention that. Now guys, I am just going to show you form number 3CA, 3CB and 3CD. So here, this is the form number 3CA. Now this form is required when person accounts are already audited under any other law, like a company. So audit report under section 44AB of the Income Tax Act 1961 in a case where accounts of the business or profession of the person have been audited under any other law. So here, how chartered accountant will write in this form. So I or we, suppose individual proprietary concern auditor, then I, or suppose if there is a partnership firm, then obviously they will write the we. So we report the statutory audit of so and so, that per name, person name, address of the assessee, PAN number of the assessee, conducted by the CA firm. So here they will write the CA firm name, provision of the, that is section 44AB of the Income Tax Act 1961 and all, and audit report so and so date. After that, here they mention about the audited profit and loss account from so and so period, that is previous year assessment year, audited balance sheet as on 31st March 2024, guys, document and all. And after that, just read the last point. That is point number 3. Point number 3 says that in my or our opinion and the best of my or our information, and according to the examination of books of accounts, including other relevant document and explanation given to me or us, the particular given in that form 3CD are true and correct, subject to the following observation and qualification, if any. So here guys, suppose if there is any like observation or qualification, then here chartered accountant has to report this. You know that if there is a difference in opinion, chartered accountant opinion says some different part, and suppose like assessee says some different point, then guys, they have to mention here. So I mentioned na, suppose if there is a difference of opinion between assessee and chartered accountant, then here a chartered accountant has to report that all the like your qualification, observation, differences in opinion, he has to write here. You got my point or not? Yes. So in the similar line, there is a form number 3CB also. But guys, this 3CB is applicable when there is like assessee account are not audited under any other law. It is only required to be audited under Income Tax Act. And here also, if there is any opinion and all, then guys, they have to write here. So any observation, qualification, they have to write in this form. After that, guys, there is a main form, that is the 3CD. So 3CD is basically, you can say that this is the main audit report. This is the main audit report, that is form number 3CD. So in 3CD, there are basically 44 clauses. We will discuss the one by one clause where chartered accountant will report. So here, this is the form number 3CD. So guys, in the form number 3CD, that clause number 1, from clause number 1 till clause number 44, there are basically 44 clauses in this particular form. So this last clause is a 44 clause. So you must seen in your office also, I think, this form, that is form number 3CD. Now, clause number 1 is the name of assessee. Just write the name of assessee. Clause number 2 is the address. Clause number 3 is a permanent account number. Clause number 4 is assessee is having the GST number or custom number and all or not. Assessee status, previous year assessment year. Second, next is under 44AB, under which clause audit is required. So these are the clauses. So we will discuss the one by one clause. We will analyze the one by one clause. So all people just focus here now. Clause by clause analysis in the form number 3CD. Now first clause is a clause number 1 is a name of assessee. Very simple clause. So name of assessee, they will write the assessee name, whether it is a company, partnership firm, whatever. Name of assessee, BB Virtuals Private Limited or BB Virtuals a partnership firm. Now suppose branch name along with the assessee name in case of tax audit of the branches. So suppose if they are having the branches also, so they will write the branch name also along with the assessee name. Now next part. Clause number 2 is related to the address. Now as communicated to the income tax office for the assessment in case of the income ITO, that is income tax officer for the assessment. In case of company, also mention the registered office if it is a different. So guys, whatever your address as per the income tax record, that you have to write in the clause number 2. So assessee address as per the income tax record will be written by the chartered accountant in this audit report. Now guys, suppose in case of the company, suppose your registered address is at different place, then that also have to mention in this audit report. Now third is a permanent account number, or you can say that PAN number. Now next part is a clause number 4. Clause number 4 is related to is assessee is having like other registered number also or not, like under custom or under excise number or like GST number. So that have to write. One more point, always remember, guys, you know that PAN number, assessee is having the only single PAN number, but GST number is required state-wise. Suppose for an example, BB Virtuals Private Limited, we are having the business in the 5 states. Then we are having the 5 GST number. All GST number we have to mention here in the clause number 4. So in 44 AB audit, in the form number 3CD, we have to mention the all GST number. So pay attention. Clause number 4 says that whether the assessee is liable to pay the indirect taxes like excise duty, service tax, sales tax, goods and service tax, custom duty, etc., or not. If yes, then please furnish the registration number or the GST number or any other identification number allotted to the same. Now all the GSTN number allotted to the assessee need to be mentioned. So all your GST number is required to be mentioned in the form. Now next part. Clause number 5 is related to the like status. What is the status of assessee, like individual or HUF or firm or company or AOP, BOI, etc., etc. Clause number 6 is related to previous year. 7 is related to assessment year. Now clause number 8 says that indicate the relevant clause of section 44AB under which the audit has been conducted. Means under which clause audit has been conducted. So guys, if we check the 44AB now, so 44AB section basically, just I'm going to show you the section 44AB. Yeah, this is the section 44AB. So in section 44AB, there are various clauses here. So 44AB clause number A is related to business. Means in case of your business, if your turnover is more than 1 crore or 10 crore, then you require to audit under 44AB clause number A. So here there will be a drop down box. So he will select the 44AB clause number A. Now clause number B is related to the profession. So in case of profession, he will select the B. Now in case of the Like suppose for an example, under section 44A, transporter and all, 44BB and 44BB, if you are declaring the lower income, then there is a like the clause number C has to select. Now D is related to the like under 44 ADA, if you are declaring the less than 50% and your income is more than basic exemption, then 44 AB clause number D, and clause number E is related to 44 AD and you are declaring lower income, then guys 44 AB clause number E will be selected. So here it is mentioned in the clause number 8. So clause number 8 is related to the indicate the relevant clause of section 44 AB under which the audit has been conducted. Now next is a clause number 8A. Here in this form 3CD, clause number 8A is related to is assessee is going with the new taxation regime or not. New taxation regime is, you know that for the companies there is a 115 AA, 115 BAA, 115 BAB, for the individual HUF 115 BAC, BAD, PAE, and is assessee has filled that form or not, 10 IC, 10 ID, 10 IF, 10 IA, IEA, so that a form, so that will be reported in the clause number 8A. So all people pay attention. Whether the assessee has opted for taxation under any of the section of 115 BA, 115 BAA, 115 BAB, BAC, BAD, BAE, and auditor has to verify that also. Here auditor will verify that form number 10 IB, 10 IC, ID, IF, IAE has been furnished or not. Now next part, clause number 9. Clause number 9 is very simple clause. This is related to the firm AOP BOI. So guys, in case of the partnership firm AOP BOI, chartered accountant in the audit report will mention about the name of the partner as well as their PSR. What is their PSR, profit sharing ratio? Suppose in the current year, if there is a change in constitution of firm, change in constitution of firm means either any partner is retired or any partner is joined as a partner, or guys all partner are continue, but suppose their PSR is changed, then it has to be reported in the clause number 9. So clause number 9 says that in case of partnership firm or AOP BOI, indicate names of the partner and member and their profit sharing ratio. And if there is any change in the partners or members or in their PSR since the last date of the last year, then particular of such change also required to be mentioned in the clause number 9. Now guys, clause number 10. Clause number 10 says that nature of business and profession. Like what is your nature of business and profession? We are into the coaching industry. So our nature of business and profession is our coaching business. If suppose more than one nature, then nature of every business or profession has to be mentioned in the clause number 10. Suppose we are doing the 2-3 businesses, we are selling the books also, then we have to mention about that also. Suppose for an example, we are providing the loan also, then we have to mention that also. Now, if there is any change in the nature, the particular of such change also required to be reported in the clause number 10 of form number 3CD. Now, next part, clause number 11. Clause number 11 says that whether the books of accounts are prescribed under section 44 AA. If yes, then list of books of accounts prescribed. Now, guys, if you remember the 44 AA, 44 AA was one section. And that section was related to mandatory requirement to prepare the books of accounts. And if you remember, there was one point in case of a specified profession, if you are the professional and if your last 3 year gross receipt was more than 1,50,000, all 3 years, 1,50,000 per year, then you required to maintain the specified book as per rule number 6F, I think, right? That cash book, bank book, and in case of the doctor, they have to they have to prepare one registered also, daily case register and daily like a stock register, a stock of medicine register. So there was a specified book under section 44 AA. So is that books are required or not? Now, in case of the business, guys, you know that like if your turnover is more than, I think turnover is more than 10 lakh, or if your PGBP income is more than 1,20,000, and in case of individual HUF that is 25 lakh and 2,50,000, then you require to maintain books of accounts. So guys, here this clause number 11 says that is assessee is required to maintain books of accounts or not. If yes, then list of the books of accounts also chartered accountant will mention here which books assessee has maintained. Now, list of books of accounts maintained and the address at which the books of accounts are kept. In case books of accounts are maintained in the computer system, mention the books of account generated by such computer system. If books of accounts are not kept at one location, then please furnish the address of locations along with the detail of books of accounts maintained. So guys, here like list of books of accounts, chartered accountant will report. Along with that, chartered accountant will mention that suppose books of accounts are maintained at home of the director or at any other place, then he will mention the address of that place also. You got my point or not? Yes. Now next part. List of books of accounts and nature of relevant document examined, means all books of accounts he has examined as well as the relevant document he has examined. So he will mention that. Now clause number 12. Clause number 12 says that whether the profit and loss account include any profit and gain accessible on presumptive basis or not. If yes, then indicate the amount of the relevant section 44 AD, AE, AF. AF is not applicable nowadays. Earlier it was AF. 44B, 44BB, BBA, BBB, chapter that is 12G, first schedule or any other relevant section. So here guys, if in case of SSC, if any presumptive taxation is applicable, suppose if any presumptive taxation is applicable, there may be possibility for one business you have took any presumptive taxation. So guys, if presumptive taxation is applicable, then just a chartered accountant has to report the turnover as well as what is the presumptive taxation basis income that chartered accountant will report in the clause number 12. Now clause number 13. Clause number 13 is very interesting. Clause number 13 says that which method of accounting employed in the previous year. So clause number 13 is related to the method of accounting. And guys, in the method of accounting is a clause number 13, means cash method or mercantile method. Now also chartered accountant report that is there is any change in the method of accounting or not. There may be possibility now. Last year SSC followed the cash system, in the current year SSC following mercantile system. And suppose there may be like vice versa, last year mercantile system, current year cash system. So here, if there is any change in the method of account or not, if it is, then it has to be mentioned. And guys, due to that change, what is the change in the profit also, that chartered accountant has to report. And one more point, due to the ICDS means income computation and disclosure standard. You know that there were 10 ICDS. So due to the ICDS, how much impact is on your profit and loss, that also required to be mentioned by the chartered accountant in the clause number 13. So what clause number 13 says, that try to understand. Method of accounting employed in the previous year. Now, whether there had been any change in the method employed vice versa, the method employed in the immediately last previous year. If yes, then give the detail of change and impact on the profit and loss account. And guys, whether any adjustment is required to be made to profit and loss for complying with the provision of ICDS or not. And you have to mention about the impact on the profit and loss. So this is the clause number 13. So clause number 13, you can remember 13 is related to the books of accounts. Like method of accounting. So under method of accounting, which method is followed, mercantile or cash? Is there is a change in the method of accounting in current year? Answer is yes. Then due to that change, what impact on the profit and loss? What ICDS, due to the ICDS, what basically like impact on the profit and loss? And guys, if there is any ICDS disclosure, that disclosure is also made in the clause number 13. ICDS disclosure is also required to be mentioned or like prescribed in the clause number 13. So just I am showing you the clause number 13 of the form number 3CD. So this is the form number 3CD and here this is the clause number 13. So in the form number 3CD, this is the clause number 13. 13 says that method of accounting employed in the previous year. So suppose mercantile or cash, whatever. Whether there had been change in the method of accounting employed vice versa, the method employed in the immediately preceding previous year, yes or no, you have to mention. And guys, if the answer of B above is affirmative, means suppose if there is a change in the method and due to change in the method, what increase in profit or decrease in profit in current year, that you have to mention. After that, here D point says that whether any adjustment is required to be made to the profit and loss complying with the provision of income computation and disclosure standard. Okay guys, is due to the ICDS, there is a change in your profit or not? Is any adjustment is required? If adjustment is required, you have to mention here only because there are 10 ICDS. And due to this ICDS, for an example, evaluation of inventory, your like income is increased so and so. So here you have to mention. And after that, guys, whatever disclosure of this 10 ICDS, that also be required to be disclosed in the clause number 13 only. So this is about the clause number 13 of form number 3CD. This is related to method of accounting. Is there is a change in method of accounting? Answer is yes. Then due to that, what like profit or loss is increase, decrease? And next part is due to the ICDS there is change in profit, that also have to mention. And last point is, okay guys, what is the disclosure due to the ICDS also be required to be mentioned in the clause number 13 of form number 3CD. You got my point or not? Yes. Now next part is related to the next clause is clause number 14. Clause number 14 is very simple clause. Clause number 14 says that a method of valuation of closing stock, means how you valued your closing stock, because normally closing stock has to be valued at cost or NRV, whichever is lower, and detail of deviation if any from the method of valuation prescribed under section 145A and the effect thereof on the profit and loss account. Guys, under section 145A, if you remember, then under section 145A they mention about the cost or NRV, whichever is lower. And guys, suppose assessee is not following the cost or NRV, assessee is following some other method, then guys, due to that, how much profit or loss is increase, decrease, that has to mention. So here method of valuation of closing stock. So here if you check the clause number 14 from the form 3CD also, here just pay attention. Method of valuation of closing stock employed in the previous year. And in case deviation from the method of valuation prescribed under section 145A, then effect thereof on the profit and loss, please furnish. So due to that, is there is an increase in profit or decrease in profit has to be mentioned here in the clause number 14. So clause number 14 of the form 3CD is related to the method of valuation of closing stock. Normally it is a cost or NRV, whichever is lower as per section 145A. And is assessee followed any other method for valuation of closing stock or not? If yes, then due to that, what is the increase or decrease in profit? That has to be reported by the chartered accountant here. You got my point or not? Yes. So this was the clause number your 14. Now next part is a clause number 15. Clause number 15 is very simple clause. Clause number 15 is related to the, like, if in the current year any capital asset is converted into stock in trade or not. If you remember, then you know that in the capital gain, we have discussed about the conversion of capital asset into stock in trade. And in case of the conversion of capital asset into stock in trade, your transfer is took place in the year of conversion, but you required to pay the tax only in the year in which that stock in trade is sold. You know that we took one example that I think assessee name was Preeti or some like, and she was having one plot, and that plot is converted into the stock in trade. After that, she built the building, and there were 20 flat of equal size and dimension, and out of that 15 flat sold in the current year. So that was conversion of capital asset into stock in trade. So here in the clause number 15, chartered accountant will report, okay, sir, is there is a conversion of capital asset into stock in trade or not? And if there is a conversion of capital asset into stock in trade, then what was the cost of acquisition of that capital asset? What is the period of holding, as well as the date of acquisition, means period of holding, date of acquisition, as well as at what value it is converted. Normally we convert at fair market value. So whatever the fair market value, that also we require to mention in the clause number 15. You got my point or not? Yes. So here, give the following particular of the capital asset converted into the stock in trade. First is description of capital asset. Second is date of acquisition. Third is cost of acquisition. And fourth is amount at which the asset is converted into stock in trade. Now next part is a clause number 16. Clause number 16 says that, okay, guys, there are certain income which has to be credited to P&L account, but suppose assessee not credited to P&L account. There may be some item which has to be credited to P&L account, but assessee has not credited to P&L account. Then chartered accountant will report here in the clause number 16. So here what this point says, amount not credited to profit and loss account being the item falling within the scope of section 28. Section 28 is a PGBP charging section. And PGBP charging section says that this income has to be credited to the profit and loss account. This income should be taxable under the head PGBP. But guys, suppose this item not credited to P&L account, then chartered accountant will report here in the clause number 16. Second is, suppose the performa credit or duty drawback or refund or duty of custom, excise or service tax or refund of sales tax or value added tax, where such credit, drawbacks or refund are admitted, is due by the authorities concerned. Now guys, suppose there is a duty drawback and all, it should be taxable under the head PGBP. It should be credited to P&L account, but assessee not credited to P&L account, then chartered accountant will report here. Now, third is a escalation claim accepted during the previous year. If you remember, then you know that we have discussed one section 145B in the income tax. And 145B says that your escalation clause and your export incentive. Escalation clause and export incentive will be taxable in the year in which reasonable assurance is received, you can say that. Means reasonably, like if it is like you can say that if reasonably it is going to receive, then it will be taxable in current year. So here under section 145B says that your escalation claim as well as the export incentive will be taxable in the year in which reasonable assurance is received, or you can say that, for an example, suppose there was a one litigation case related to the escalation claim. And guys, suppose you won the case. So when you won the case, still you have not received the amount, but when you won the case, it means like reasonably it is assured na you are going to get that. So in that year, it is going to be taxable. Now next part, any other item of income or any capital receipt, and if it is not credited to P&L account, then chartered accountant has to report here in the clause number 16. Now guys, clause number 17 you can remember. Clause number 17 is basically clause number 17 you can remember by stamp duty value, SDV, and 17. Clause number 17 is related to the SDV. You know that we have discussed the two sections. One was section 43CA and one was section 50C in the capital gain. So if you remember, then section 50C says that if any assessee transfer the capital asset, and 43CA says that assessee transfer the stock in trade, and that is immovable property. And if your sale consideration is lower than SDV and SDV is more than 110% of sale consideration, then SDV will be treated as your full value of consideration. So this is the clause number 17. Suppose in the current year, assessee transfer any immovable property or not. If assessee transfer the immovable property, what is the stamp duty value? What is the consideration? And is that stamp duty value is more than consideration by 110% or not? That has to be reported in the clause number 17. So 17 is a stamp duty value. You can remember by stamp duty value. So 17 is a stamp duty value. Now guys, next clause number 18. Clause number 18, guys, 18 is basically, you know that when you attain the age of 18, then guys, you know that you always block with someone. Means girlfriend, boyfriend and all. At the age of 18, you block with someone. So this clause number 18 is related to the block of asset. Means in what is your opening WDV? Now, what is your rate of depreciation? If any asset is acquired in the current year, what is the actual cost? Now guys, if there is any addition or deletion from the block, that you have to mention. What is the depreciation allowable in the current year? What is the closing WDV? So that has to be mentioned in the clause number 18. So chartered accountant will report in the clause number 18, and clause number 18 is basically related to the block. When you block, whenever you attain the age of 18, then you always block with someone. So it is a block of asset. So here guys, what clause number 18 says, pay attention. Particular of depreciation allowable as per Income Tax Act 1961 in respect of each asset or block of asset as the case may be in the following form. First, you have to mention the description of asset. Second is rate of depreciation. Third is actual cost or WDV. Fourth is additions or deduction during the year with the dates. Means what addition or deduction during the year. In case of any addition of any asset, what is the date of put to use? Including the adjustment on account of the two things. One is the any Senvet credit claim or allowed under Central Excise Act 1944 in respect of asset acquired on or after 1st March 1994, Guys, suppose related to asset, nowadays you know that related to asset you can take the input tax credit also on the GST or any like type of the indirect taxes. Suppose if any ITC is applicable, then it will not be forming part of your block of asset, so that also you have to mention. Change in rate of the exchange of the currency. If you remember one section 43A we have mentioned, we have studied in the PGBP. Okay, if any asset is acquired from outside India on the foreign currency loan or for supplier credit, and at the time of payment if there is a change in foreign exchange fluctuation rate, and due to that if there is a loss or gain, it has to be adjusted with your block of asset. So that also mentioned. As well as guys, suppose if any subsidy or government grant is received, if any subsidy or government grant is received related to asset, then it has to be reduced from your block of asset, so that you have to mention. And guys, whatever depreciation allowable in current year, WDV at the end of the year, you have to report in the clause number 18. So clause number 18 is a block means you block at with someone, so whenever there is a addition deletion in the current year, that you have to mention in the clause number 18. Now guys, clause number 19. Clause number 19 is related to the some special deduction. Some special deduction means amount admissible under section 33 AB or ABA. 33 AB or ABA, if you remember, Tea, Coffee and Rubber Development Board. Okay, if you deposit under the NABARD, then 40% of deposited amount or 40% of your income or amount deposited in NABARD, whichever is lower, deduction is available. 33 ABA is related to the site restoration account, means assessee is engaged in the extraction of the petroleum, natural gas and all, and if he deposited with SBI in the site restoration account, then 20% of BGBP income or amount deposited, whichever is lower, deduction is available. After that guys, 3511, 3512, 3512A, 353, 3514, 352AA, 352AB is related to the scientific research expenditure. So if any expenditure on the scientific research, either it is in-house research or donation made to any outsider. So either it is an in-house research or donation made to any outsider, then deduction is allowed. So that amount will be allowed under then that has to be reported in the clause number 19 by the chartered accountant. As well as 35 ABB. 35 ABB is related to that telecommunication license. 35 AD, that is specified business, that 14 businesses. 35 CCA nowadays not relevant. 35 CCC and CCD is related to the agriculture extension project, skill development project. 35D, DD and DDA, and 35E. 35D, DD and DDA is related to preliminary expenses, amalgamation, demerger, as well as the VRS expenditure. So this expenditure is admissible under this section, has to be reported by chartered accountant in the clause number 19. Now guys, clause number 20 is related to the sum paid to employee as a bonus and commission. Guys, you know that if any bonus and commission is paid to the employee, then it has to be reported in the clause number 20. And along with that, if you remember, you know that we have discussed one section 36 subsection 1, clause number VA or 5A, you can say that clause says that okay, if any amount is received by employer from employee as a PF contribution or as a ESI contribution or any fund contribution, then it has to be deposited in that fund up to the due date of that fund. Otherwise, it will be treated as income of the employer. So that has to be reported in the clause number 20. So clause number 20 says that suppose what is the bonus and commission to employee, it has to be mentioned here. As well as guys, suppose if any amount is received by employer from employee towards the PF contribution or towards the ESI contribution or towards the any other fund related contribution, and that amount is deposited in that fund up to the due date of that fund or not, means up to within the 15th of the next month or not, if it is deposited, then it's okay. Otherwise, it will be treated as income of the assessee, means income of the employer. You got my point or not? Yes. So what this point says, clause number 20, pay attention. Sum paid to employee as a bonus or commission. Detail of the contribution received from the employee for various funds as referred to in section 36 subsection 1, clause number 5A. Now clause number 20 you have to remember. Now guys, at the age of 21, at the age of 21, like 21 age, at 21 age, you know that like we are, like many times we are rejecting and all, disallowing a lot. So suppose at the age of 21, when you reach the age of 21, then your family member always like find some girl or boy for you, but you are rejecting, you are disallowing. So this is related to disallow. This is related to the disallowance. Okay. So section clause number 21, basically at the age of 21, at the age of 18, you just block with someone. But at the age of 21, your family member always show you some girl photo portfolio, girl, boy and all, and you disallowed. Oh, it's not allowed. So 21 is related to the disallowance. Now guys, under 21 disallowance, there are various sub clauses also. First is, please furnish the detail of amount debited to P&L account being the nature of capital or personal expenditure or advertisement expenditure in documents of political party. So guys, if there is any personal expenditure, it is disallowed. Any like capital expenditure is disallowed, or advertisement in the brochure of political party is going to be disallowed. So this has to be reported in the 21A. After that, 21B, you can remember the, you know that whenever there is a big payment, you have to deduct the TDS. Otherwise, it will be disallowed under section 40. So under section 40, if you remember, then we have discussed about the TDS not deducted. If any payment is made to non-resident or foreign company and TDS not deducted or deducted but not deposited up to the due date of return filing, then it is disallowed. Or like in case of resident pay, 30% is disallowed. So that is under like subclause number B of 21. So you can remember 21B. B means big payment, TDS is not deducted, then it is disallowed. So that is under 21B. Now 21C says that amount debited to profit and loss being interest, salary, bonus, commission or remuneration inadmissible under section 40 clause B or 40BA and computation thereof. Guys, you know that whenever partnership firm pay any remuneration or interest to partner, then it is allowed as per the limit. And what was the limit? Limit was in case of the interest, if it is 12% simple interest on partner's capital or partner's loan, and in case of the remuneration, there is a one calculation method, book profit. First calculate the book profit, and on that book profit, first 3 lakh is book profit multiplied by 90% or 1,50,000, whichever is higher, and on the balance book profit there is a 60%. Balance book profit there is a 60%. So that much remuneration or interest is allowed. Now in case of the AOP BOI, you know that any remuneration interest is not allowed. So that has to be mentioned in clause number 21C. Now 21D. D you can remember. D means, you know that in a day, D means day. In a day, more than 10,000, cash payment is not allowed. So disallowance or deemed income under section 40A subsection 3. 40A subsection 3 is related to, okay, guys, in a single day to a single person, more than 10,000 in cash is not allowed. It has to be made by account pay check, account pay demand draft, any mode of electronic clearing system. Now next part. E says that provision for payment of gratuity not allowed. So provision for gratuity not allowed. Now F means, guys, if to your like a relative, any payment is here any sum paid to assessee as an employer not allowed under section 40A, that is payment to the unregistered gratuity and PF. Guys, you know that in the PF only SPF contribution of employer is allowed, RPF contribution is allowed. After that, approved gratuity fund is allowed, but unrecognized provident fund not allowed, unapproved gratuity fund not allowed, unapproved superannuation fund not allowed. So if employer made the any contribution to the unapproved gratuity fund or unrecognized provident fund and all, then it is not allowed. It has to be reported in the 21F. Now next part. Particulars of any liability of the contingent nature. Contingent liability is not allowed. After that, point number H says that, guys, you know that if your income is exempt, then expenditure is not allowed due to section 14A. 14A says that if your income is exempt, then expenditure is not allowed. Like agriculture income is exempt, then expenditure is not allowed. So here it has to be mentioned in subclause number H of clause number 21. And last part, amount inadmissible under proviso to section 36(1)(3), that is interest on loan of the capex till it's put to use. Guys, you know that if any capital asset is acquired and capital asset is acquired out of borrowed money, then it will be allowed only after the date when asset is put to use. But up to the date of put to use means when asset got put to use. So up to the date of put to use, it has to be capitalized. Up to the date of put to use, it has to be capitalized. But once asset is put to use, then after that, that expenditure, that interest is allowed. Now next part. So this is all about clause number 21. So you can remember clause number 21 means when you attain the age of 21, then your family member will show you the like your future husband and wife, but you always reject, no, disallowed, disallowed, disallowed. So this is about the disallowance. Okay, and under this subclause also you can remember 21B is a B means big payment, TDS not deducted. Then, and guys, D is daily more than 10,000, then it has to be disallowed. So this has to be reported by chartered accountant. Now next part, clause number 22. Clause number 22 says that, not relevant clause. Clause number 22 says that amount of interest inadmissible under section 23 of the MSME Act 2006. So under MSME Act, there is a section 23 and 23 says that a certain interest is not allowed. So that will not be allowed. And here chartered accountant has to report in the clause number 22. Now clause number 23, basically clause number 23 says that particular of payment made to person is specified in section 48 to B, that is, you know, that your relative. If any payment is made to your relative, then guys, you know that reasonable is allowed and unreasonable or excessive is going to be disallowed. So if reasonable payment, then allowed, but if there is an unreasonable or excessive payment, then it is going to be disallowed. So here reasonable is allowed and unreasonable is disallowed. So if there is an unreasonable payment, they have to report here in the clause number 23. Now, clause number 24 is related to amount deemed to be the PGBP under section 33AB or 33ABA, that is withdraw or closure of deposit, is taxed. If you remember, then you know that whenever any amount is deposited in the NABARD, then that amount has to be withdrawn and that has to be used for the purpose prescribed by the Tea, Coffee and Rubber Development Board. Guys, if there is any misutilization, then it is taxable. Or guys, suppose in the year when it is withdraw, in that year it is not used, then also it is going to be taxable. So is there any amount is taxable? That has to be mentioned in the clause number 24. Now clause number 25 is related to the section 41. Section 41 says that, if you remember, bad debts recovery is 41.4. Now terminal depreciation and balancing charge is a 41.2. 41.1 says that if any expenditure deduction you have claimed earlier, and guys, now there is a refund or remission or cessation of trading liability, then that is going to be taxable. That is the your like section 41. So that has to be report in the clause number 25. So under clause number 25, any amount of profit chargeable to tax under section 41 and computation thereof has to be taxable, and it has to be mentioned in the clause number 25. Now next part. Any amount allowed or disallowed as per section 43B. 43B, that mukhe nale kande, you know that there are certain payment that you have to make that payment up to the due date of return filing, that interest on loan taken from schedule bank or PFI and all, leave salary, bonus and commission to the employee, any indirect taxes and all, or any amount paid to the Indian Railway for use of railway assets, that has to be made up to the due date of return filing, otherwise it will be disallowed in current year. So that has to be mentioned here in the clause number 26. After that, clause number 27. Clause number 27 is related to amount of any SENVET or GST credit availed of or utilized during the previous year, its treatment in the P&L account, and treatment of outstanding SENVET or GST credit in the amount, and particular of income or expenditure of prior period credit or debited in the P&L account. So guys, here this clause number 27 is related to your GST. 27 is related to GST. Now clause number 27 says that clause number 27 is related to how much GST credit was available, how much credit you have utilized in the current year, what is the impact in your profit and loss account, is there is any like credit going to carry forward, that you will mention. If any brought forward credit that was available for the earlier year you have claimed in the current year, that you have to report here. So this is all about the clause number 27. Now clause number 28, there is a clause number 28, but that is not relevant, guys, because clause number 28 is related to one section 56 subsection 2, clause number 7A. Earlier that 7A was applicable, but nowadays clause number 7A is not applicable, and clause number 28 is related to that 56 to 7A. So that is not applicable as of now. Now it is not applicable because that is already merged with section 56 to 10 under the gift section. So that's why I have not covered here clause number 28. Now clause number 29. So clause number 29 is, first point is whether during the previous year the assessee received any consideration for issue of share which exceed the fair market value under section 56 to 7B. If yes, please furnish the detail of same. So guys, clause number 29 is basically related to the angel tax. If you remember the other sources, capital gain topic, first topic, and in the other sources I have mentioned that, okay, guys, for an example, whether during the previous year, like if any closely held company issue the shares and that shares are issued on the premium, and guys, you know that your issue price is more than fair market value, then issue price minus fair market value, that difference is going to be taxable under income from other sources. I have mentioned about the angel tax, but that is not applicable in case of certain startup and all. So here they have to report. Chartered accountant has to report in the clause number 29. Now guys, here 29A clause, clause number 29A is related to the 5629. If you remember, advance money forfeited. If any advance money is received by assessee on or after 1st April 2014, and if it is forfeited, deal has not closed and amount is forfeited, that has to be mentioned in the clause number 29A. Now clause number 29B is related to the gift 56 to 10. So any amount to be included in IFOS under section 56 to 10. So you can remember clause number 29. So guys, nowadays you know that when you attain the age of 29, then you will get married. So you will find your BV. So BV means B means BV. So BV will be find BV, wife. So wife, BV, that in Hindi we call it BV. So BV will be find at the age of 29. So 29B, that marries, and at the time of marriage any gift is received, that is not taxable. So this is all about 56 to 10 is related to the gift. Now clause number 30, not more relevant clause. Clause number 30 says that detail of any amount borrowed on hundi or any amount due thereof, including interest on the amount borrowed, repaid otherwise than account pay check. So guys, on the hundi is basically a promissory note. Suppose I am having the promissory note, and on the basis of that promissory note, I have taken the cash loan, or I am paying the loan in cash. So guys, there will be a violation of section 69D, and 69D will be applicable, and guys, this income will be taxable at the rate 60%. And you know that 60%, and there will be a surcharge, health and education cess, and effective tax rate will be 78%. So that is all about the clause number 30. Now guys, if you not possible to remember 30, it's okay. Now, but you have to remember the clause number 30A and 30B. That two clauses you have to remember. Now, how you can remember 30? So guys, you know that in our DT paper, if you remember little bit, so I have mentioned that normally 30 marks cover for the international taxation. In our DT paper, 30 marks for the international taxation and 70 marks is for your DT. So 30, you remember 30 is international taxation. So this clause number 30A and clause number 30B is related to the international taxation. And guys, in the 30A, A means associate enterprise. And if you remember, then you know that whenever there is a transaction between associate enterprise and if there was a primary adjustment and secondary adjustment under section 92 CE, and under primary adjustment, if your income is increased, then guys, you have to repatriate that money in India within the 90 days from associate enterprise. Otherwise, it will be treated as deemed loan, and every year your interest income will be included. So this is all about the clause number 30A. 30A means if there is a primary adjustment or not, and due to primary adjustment is there is a secondary adjustment or not, is money is with associate enterprise, how much money is repatriated in India, what amount not repatriated in India, it is treated as loan, and what will be the interest amount. So that will be the reporting requirement in form number 3, in form 3CD in the clause number 30A. So here, whether primary adjustment to the transfer pricing under section 92 CE has been made during the previous year, yes or no? If yes, then furnish the following detail under which clause primary adjustment is made. So primary adjustment, you know that there were 5 clauses in transfer pricing. One was like suo motu made by assessee, or due to the assessing officer or appellate authority made the order, and due to that order there is a primary adjustment, or due to the APPA advanced pricing agreement, or due to the MAP, or due to the safe harbor rule. How that primary adjustment is made, you have to select here. Now, amount of primary adjustment and whether excess money available with the associate enterprise is required to be repatriated in India or not. And if yes, then whether the excess money has been repatriated within the prescribed time or not. And guys, if no, then amount of imputed interest income on such excess money which has not been repatriated within the prescribed time limit. So this is the 30A. Now 30B is also interesting. You have to remember 30B. 30B you can remember by way of 94B. So 30 is international taxation, 30B, 94B, 30B, 94B. You know that 94B was related to the thin capitalization in the transfer pricing. Thin capitalization means basically if any amount is borrowed from your associate enterprise and if you paid the interest, then that interest is allowed within the 30% of EBITDA. You know that earning before interest and tax depreciation amortization. So EBITDA 30%, that 30% interest is only allowed. So that 30% limit is given in 94B. And guys, that 94B section is applicable even loan is not taken from associate enterprise, but you know that associate enterprise deposited the matching or corresponding amount and you took the loan from any other person, then also this section is applicable. But this section is applicable only if the interest expenditure is more than 1 crore. So that reporting requirement will be in the clause number 30B. So here, whether the assessee has incurred expenditure during the previous year by way of interest or of the similar nature exceeding 1 crore or not. If yes, then please furnish the following detail: amount of expenditure by way of interest or similar nature incurred. What is your EBITDA during the previous year? Any expenditure by way of interest which exceeds the 30% of EBITDA will be disallowed. Now guys, detail of interest expenditure brought forward as per section. Suppose from the last year, if there is a any interest which was not allowed in the last year, it may be allowed in the current year if it is within that limit of 30% of EBITDA. And guys, what interest will be carried forward to the next year? Because till 8 years this interest can be carried forward. Now guys, clause number 30C is not more relevant. This is related to the impermissible avoidance arrangement. Is GAR is applicable or not? Means is assessee entered into any type of the arrangement where it is an impermissible avoidance arrangement, is GAR is applicable or not? And if it is applicable, then what is the tax benefit is taken by the assessee? So here, whether the assessee has entered into the impermissible avoidance arrangement under section 96 during the previous year or not. If yes, then nature of impermissible avoidance arrangement and amount of tax benefit in the previous year arising in aggregate all the parties to the arrangement. Now guys, clause number 31. So clause number 31 is basically, clause number 31 is related to the, clause number 31 you can remember, is related to the 269 SST and ST. And you remember that, you know that we discussed the 269 SS, 269 T. 269 SS and T is if any cash loan is taken of 20,000 rupees or more, or if it is repaid or 20,000 or more in the cash, then guys there is a violation and 100% penalty is applicable. One more section we have discussed, section 269 ST, and 269 ST says that in a single day or on the single occasion or event or in relation to single transaction, you cannot receive the cash of 2 lakh or more. If you receive the cash, then there will be a violation and penalty of 100% is applicable. So that will be reported in the clause number 31. So clause number 31 is related to the 269 SST and 269 ST. Now clause number 32 is related to your brought forward losses and unabsorbed depreciation. Guys, 32 you can remember by way of the 32 is a depreciation section is also 32 in the income tax, and guys 32 is a depreciation. So if there is any unabsorbed depreciation, so if there is any unabsorbed depreciation, means brought forward your depreciation as well as brought forward losses, speculative business losses, specified business losses, that has to be reported in the clause number 32. So here, detail of brought forward losses and unabsorbed depreciation allowance to the extent it is available. Now, whether there is a change in shareholding of company has taken place in the previous year due to which the losses incurred prior to previous year cannot be allowed to carry forward under section 79. Guys, you know that in the section 79 there was a one case, in case of closely held company. Guys, if there is a change in shareholding, guys, suppose loss incurred in the last year and loss is set off in the current year, it can be set off only if the 51% or more shareholder are same. Otherwise, that losses are not allowed to be set off in the current year. So that reporting requirement will be in the 32B. Now 32C, whether the assessee has incurred any speculative losses during the previous year. If yes, then please furnish the detail of the same. Is assessee incurred any specified business losses? Specified business means that cold chain facility, warehousing, hotel, hospital and all. then please furnish the detail of same. Now clause number 33 is related to the deduction. 33 is related to the deduction. So 33 is a deduction. 33 is a deduction. At the age of the 21, like they show you the girls, boy and all that, you just rejected deduction. Now after marriage, at the age of 33, no, I cannot tell. Okay, just remember 33 is related to the deduction. Deduction means 80C to 80U deduction, as well as the 10AA deduction. So that deduction detail will be section wise detail of deduction, if any, admissible under chapter 6A or chapter 3, that is section 10AA. Now guys, clause number 34. Clause number 34 says that, okay, guys, in the current year, is assessees required to deduct TDS or collect TCS or not? Means is TDS, TCS applicable or not? If it is applicable, then is TDS, TCS deducted, collected or not? Is TDS written, is filed or not? If any interest is paid or not? So this is all about the TDS. So here, whether the assessee is required to deduct or collect the tax as per the provision of so and so chapter, that is TDS, TCS. If yes, then please furnish the detail. Whether the assessee is required to furnish the statement, means written, of TDS, TCS or not. If yes, then please furnish the detail. Whether assessee liable to pay the interest under section 2011, a late deduction or late payment of TDS. If yes, then please furnish the detail also. So this clause 34 is related to TDS, TCS. Now guys, clause number 35, not more relevant. Clause number 35 says, the 35 says that, okay, in case of the trading concern, means suppose if you are engaged in the trading business, then you have to give the quantitative detail also, quantitative detail of your opening stock, closing stock, purchase and all. Suppose in case of the books, so books quantity we can identify, so quantitative detail. So here, in case of the trading concern, give the quantitative detail of principal item, only for principal item of goods traded, opening stock, purchase during the previous year, sales during the previous year, closing stock, shortage or excess if any. In the case of manufacturing concern, give the quantitative detail of the principal item of raw material, finished goods and byproduct. So guys, in case of manufacturing concerns, you also have to give the quantitative detail of the principal item of your raw material, finished product and byproduct. Now guys, there is a clause number 36A. 36A is related to deemed dividend under section 222E. 222E, if you remember, we have discussed that any amount, like if there is a closely held company has given the loan or advances to any shareholder who is holding 10% or more equity shareholding, or given to any concern in which that shareholder is having the substantial interest, or given to any other person on the behalf of shareholder or for the benefit of shareholder, then guys, it will be treated as deemed dividend to the extent accumulated profit of the company. So here, whether the assessee has received any amount in the nature of dividend under section 222E or not. If yes, then please furnish the following detail: amount received, date of receipt, etc., etc. After that, clause number 37 is related to the cost audit. Is cost audit is done or not? Because you know that for certain manufacturing company, cost audit is mandatory. So cost audit is done or not? And guys, if cost audit is done by the CMA, then is there is any disqualification or a disagreement made by the cost auditor or not? If yes, then that has to be mentioned here in the clause number 37. So here, whether any cost audit was carried out, if yes, give the detail of any disqualification or disagreement on any matter, item, value, quantities may be reported or identified by the cost auditor. Same. Clause number 38 is related to whether any audit was conducted under Excise Act or not. Is there is an excise audit? If yes, then what is the disqualification or disagreement of the that auditor who did the excise audit? Now guys, clause number 40 is related to some ratios. You have to give some ratios like that is your gross profit to turnover ratio, net profit to turnover ratio. So you have to mention about certain ratios here in the clause number 40. So detail regarding the turnover or gross profit ratio, etc., for the previous year as well as the preceding previous year. So comparative. Now total turnover you have to mention, gross profit to turnover ratio, net profit to turnover ratio, stock in trade to turnover ratio, material consumed to finished goods produce ratio you have to given in the clause number 40. Now next part is a clause number 41. Clause number 41 says that Okay, please furnish the detail of demand raised or refund issue during the previous year under any tax law other than Income Tax Act 1961 along with the detail of the relevant proceeding. So guys, under GST, suppose if there is any demand is raised in the current year or any refund is made in the current year, so that detail will be furnished by the tax auditor here in the tax audit report. So under any other law other than Income Tax Act, if there is any demand or refund, then that detail will be furnished in the clause number 41. Now clause number 42 is related to is any SFTs or reportable account is required or not. Means SFT or report, like bank has to furnish the SFT and reportable account, as well as you know that we have discussed the SFT topic, statement of financial transaction. Okay, in the certain cases your detail will be furnished to the income tax department. So is assessee is required to furnish the statement in the form number 61 and 61A or 61B if yes or no, SFT or reportable account, and if yes, then please furnish the detail. Now next section is next clause number 43 is related to country by country reporting. So 43 is also related to your international taxation, that is country by country reporting. First point is assessee or alternate reporting entity is liable for CBC reporting or not. CBC reporting, country by country reporting. So here, whether the assessee or its parent entity or alternative reporting entity is liable to furnish the report under section 286, that is CBC reporting or not. If yes, then please following detail also. Whether report has been furnished by assessee or its parent entity or the alternative reporting entity or not. Name of the parent entity, name of the alternate reporting entity, as well as date of furnishing the report. And guys, this is the last clause, clause number 44. Clause number 44 is about your expenditure. Okay, whatever expenditure you made, now that expenditure is paid to the GST registered dealer or non-registered dealer and all that you have to mention here. So all people pay attention. Breakup of total expenditure of entity registered and not registered under GST, specifying the total amount of expenditure incurred during the year, expenditure in respect of entities registered under GST relating to goods or service exempt from GST, relating to the entities falling under composition scheme, relating to the other entities, and total payment to the registered entity. Expenditure relating to entities not registered under GST also need to be specified. So this is about your expenditure breakup. So this is all about your tax audit topic. Guys, under tax audit, what you have to remember? First, you have to remember this part, obviously. After that, you have to remember this part also. Okay, if there is a difference of opinion between chartered accountant and assessee, then it has to be reported in the form number 3CA, 3CB. After that, some clauses you have to remember. Now we are going to take a break of the 10 minutes, and after break, we will directly start with the we are going to start with the question of this topic. Okay, so just take a break for 10 minutes. After that, we'll start with next part. Haji, done with your break? Welcome back after break. Now guys, just check the question. 2 questions we already did. Now we are going to start with the third question. So what third question says? Pay attention. So question number 3 says that there is a one company X Limited is an Indian company, paid the interest of 95 lakh to the YINC, a non-resident associate enterprise, in the previous year 23-24 on the loan borrowed from it. So basically, in India there is a one company, name is a X Limited, and there is a one company YINC, and YINC and X Limited both are associate enterprise. And X Limited paid the interest of 95 lakh rupees to XINC. So here, interest is paid to associate enterprise XINC 95 lakh rupees in the current year on the loan borrowed, and both are associate enterprise. So guys, transfer pricing is applicable. Now what happened next? Here X Limited also obtained a loan of 5 crore at the rate 10% per annum on 1/4/2023 from YINC, a foreign company in which it hold the 20% voting power. Now guys, what happened? This X Limited also taken the loan from the YINC of the 5 crore. And guys, here 5 crore loan is taken. And in YINC, they are holding only 20%. So can I say that there is no associate enterprise? Associate enterprise definition says that 26% or more equity shareholding at any time during the previous year. So here there is no 26%. So there are no associate enterprise. But guys, what happened here? Next part. XINC means associate enterprise, deposited 2 crore with the YINC. Now here, this XINC, they have deposited 2 crore with the YINC. 2 crore deposited, but they took the loan of the 5 crore from YINC. Now guys, what happened here next? Here, X Limited contend that the provision of section 94B of transfer pricing is not attracted in this case, since the interest paid to the non-resident associate enterprise does not exceed 1 crore in the previous year 23-24. So here, this company says that whatever interest we are paying to our associate enterprise, that is only 95 lakhs. So here 94B section is not applicable. That is view of the assessee. Now, but what chartered accountant says? The tax auditor is, however, of the opinion that the interest of 20 lakh, that is 10% of the 2 crore, also has to be considered for the purpose of section 94B. Here, auditor says that basically, guys, this 95 lakh is interest, but on the 5 crore, there is a 50 lakh rupees interest. But here, this matching amount is 2 crore. Na? If you remember, then we have mentioned that if any matching amount or corresponding amount is deposited by your associate enterprise to the any person, and from that person if you have taken any loan or amount is borrowed, then guys, this will be treated as loan from associate enterprise also only, and section 94B is applicable. So here chartered accountant says that I will consider the 2 crore is corresponding amount here, and on 2 crore 10% is a 20 lakh, and 20 lakh plus 95 lakh, it's more than 1 crore. So here 94B is applicable. That is view of chartered accountant. Now next part, X Limited contend that XINC has not deposited a corresponding and matching amount of 5 crore with the YINC, and hence the provision of 94B will not be attracted. In this case, examine the reporting requirement, if any, of the tax auditor in this case. Guys, what is the reporting requirement and all? So guys, whenever you answer this type of question, first you have to write the provision of the income tax law. Okay, what is the provision of income tax law? So here guys, provision of income tax law says that 94B, loan from associate enterprise, matching amount and all. After that, relevant clause of the form number 3CD. So under 3CD, we have discussed the clause number 30B, 94B, 30B is a clause number. And guys, now always remember, whenever there is a difference of opinion, because there may be a two views now. One view says that okay, this loan will not be considered because here there is not a matching or corresponding amount. Loan is taken 5 crore and amount is deposited 2 crore. So this is not a matching amount. So 94B is not applicable. But second view says that no, out of this 5 crore, 2 crore is a matching amount. Na? So on 2 crore, 94B is applicable. So there is a two views, and guys, whenever there is a change, whenever there is a difference in the opinion, then it has to be right in the form number 3CA. So here, this is the company. So in the case of the company, form number 3CA will be filed by the chartered accountant auditor. So 3CA, in the form number 3CA, he will write in the form number 3CA or 3CB, like here it is a 3CA basically. So in the form number 3CA or 3CB, he will write what is the difference, because like income tax authority should come to know that okay, on this point there is a difference between like chartered accountant and assessee. So here, like suppose here, like you have to read this, and after that, accordingly, in this case, the tax auditor may state both the viewpoint in clause number 30B as well as report the difference of opinion approximately as the observation in para 3 of the CA to enable the tax authority to take the decision on the matter. You got my point or not? Yes, I'm going to give you 2 minutes time. Just read it, and after that, just check the question number 4. Just read it and then check the question number 4. Yes, people. Now just check the question number 4. What question number 4 says that? Okay, there is a one company, ABC Limited is engaged in the transportation of building material and transportation of goods to the contractor. So basically here ABC Limited is a company, they are the transporter. Now it made the payment for hiring the dumper for this purpose. So they have hired the dumper or tipper from any other person, and the company has not deducted the tax at source on the ground that since the payment was for transportation of goods and not renting out the machinery and equipment, and such payment could not be termed as rent paid for the use of machinery under section 194I, and hence no tax was deductible at source. Now guys, they have hired the dumper from any other transporter, and here they are saying that we have not hired any planted machinery, so TDS under section 194I is not applicable, so they have not deducted the TDS. But the tax auditor is, however, in the opinion that a transaction being is in the nature of the contract for shifting of goods from one place to another would be covered under the work contract. Here auditor or chartered accountant says that this is the work contract, so TDS should be deducted under section 194C, means under section 194C TDS is applicable, that is mentioned by chartered accountant, thereby attracting the provision of section 194C. Chartered accountant says that 194C is applicable. He relied upon the Gujarat High Court ruling on that is in case of the Mahalakshmi Transport Company, what is the reporting responsibility of tax auditor in such a case and the consequence ethical implication examined. So guys, here there is a difference of opinion between the chartered accountant and the client. So always there is a difference of opinion, always it has to be mentioned in the form number 3CA. So in 3CA here chartered accountant will mention, as well as guys, since TDS is not deducted because TDS is applicable, TDS is not deducted because subcontract is included in contract, so TDS is not applicable, no, TDS is not deducted, it's also required to be report, and guys this expenditure will be disallowed, and disallowance we have discussed in section 21, sorry, clause number 21. So under clause number 21 of the 3CD he will report that TDS is not deducted, so it will be disallowed. And guys, if chartered accountant has not reported in 3CA, then he may be treated as guilty of you can say that professional, in the professional ethics, in the audit you have seen that there is a second schedule, part 1 clause number 7. So part 1 of the clause number 7 of the second schedule of the Chartered Accountancy Act 1949, whenever chartered accountant is not doing the correct work, then he may be treated as guilty. So this you have to required to answer in this particular question. So pay attention. So here as per the clause number 24A of the form 3CD, that whenever TDS is applicable or not, that you have to mention. The tax auditor is required to report whether the assessee is required to deduct or collect TDS TCS under so and so chapter. If yes, then furnish the detail mentioned thereunder. While answering the issue of applicability of provision of TDS, a number of debatable issues may arise before the assessee as well as the tax auditor. The tax auditor may have a difference of opinion with regard to the applicability of provision of TDS TCS on a particular payment. In such a case, the tax auditor has to report the difference of opinion appropriately as an observation in para 3 of the form 3CA. This requirement is contained in the guidelines note of the tax audit. Now, also in the clause number 21B2, form 3CD, the amount inadmissible, that is disallowed under so and so section, has to be mentioned. Now, in case the tax auditor does not comply with the reporting requirement under this clause and fails to mention the difference of opinion appropriately as an observation in para 3 of form number 3CA, then clause 7 of part 1 of second schedule of Chartered Accountancy Act 1949, you already studied in your professional ethics in your audit paper, for not exercising the due diligence may be invoked. You got my point or not? Yes. Now next part is a question number 5 is an interesting question. Now what happened here? Pay attention. A search was conducted under section 132 of the Income Tax Act 1961 in case of the LMN Jewelers Private Limited, a gold jewelry retail chain. So there is a gold jewelry shop, name is a LMN Jewelers. Raid is conducted under Income Tax Act, search conducted on 28 Feb 2023. Now what happened? As part of the post search inquiries, data from the billing software was analyzed. They analyzed the data, and on the analysis of this data, it was found that the company was involved in the violation of section 40A3. in the major way in the tune of the 20 crore for the purchase of the old gold. Now guys, what happened when income tax department was analyzing the software data, then they realized that assessee made violation of section 40A subsection 3, that cash payment more than 10,000, cash payment more than 10,000 in a single day to a single person will be disallowed. So they did the violation, and that violation amount is approx 20 crore rupees. Now what happened next part? In order to verify the findings, when they verified the finding, the culled from the digital data, some of the customer whose whereabout were available from the computer record were contracted, and their statement were recorded under the oath. And this customer admitted under the oath that they had sold old gold, and received the amount all exceeding 10,000 in the cash. Now guys, what happened? When income tax department contacted the customer, then from customer they received the statement, and in that statement also it is proved that yes, they have received the payment of more than 10,000 in cash from this jewelry shop. Now next part. The fact which emerged from the inquiry that Element Jewelers purchase the old gold and make payment to this purchase in cash even if they exceed the 10,000. So here from inquiry it is established by the income tax department that yes, here there is a violation of section 48(3). Now how tax auditor has mentioned in the tax audit report, pay attention. However, the tax auditor has mentioned yes in response to the statement in the subclause A of clause 21D as whether the expenditure covered under section 48(3) read with the rule 6DD were made by account pay check drawn on the bank or account pay bank draft. Now what happened guys, in the tax audit report there is a clause number 21 and 21D in a day more than 10,000. Here chartered accountant mentioned that every payment is received by account pay check, account pay demand draft and any mode of electronic clearing system. It means chartered accountant not did the audit as per, he has not inquired and all. So he just mentioned yes, all payment is received by account pay check and all. Now why? Here tax auditor submitted that the standing instruction were given by the management of the entity to the employees to make the payment above 10,000 only through account pay check and bank draft or other permissible electronic mode, and copy of this instruction were verified by him. He says that, chartered accountant says that, auditor says that basically there is a management instruction and management instruction is given to the employees. Management instruction is given to the employee, and in that instruction they clearly mention that all payment more than 10,000 should be made by any mode other than cash. Now what happened? He further submitted that he had also taken the representation from the management that net payment in cash to any person in a day did not exceed 10,000. He submitted that he has taken the representation from the management, and management says that we made the payment more than 10,000 by other mode only. Also, he mentioned that the test check conducted by him did not reveal any violation. Now he did the test check also, and he says that as per test check also there is no issue. Examine the ethical implication in this case and the consequences thereof. Now guys, this question, now what you have to write in your paper, if this question asked, then what you have to write? Always remember that whenever there is any question, first write the income tax provision. What is the income tax provision? So here guys, this question is about section 40A(3). Now first you have to write in the first paragraph, just write the section 40A(3) only. 40A(3) says that in a single day to a single person any payment is made of expenditure more than 10,000, then it should be made by account pay check, account pay demand draft, any mode of electronic clearing system through bank account and all. That you have to write. After that, write the clause number 21D of that 3CD form. 21D that says that if there is a violation, then you have to report here disallowance and all. That you have to write. Now guys, here what guidance note on the tax audit issued by ICAI says that, pay attention. The guidance note on the tax audit issued by ICAI states that there may be a practical difficulties in verifying whether each payment is made through account pay check, bank draft or ECS or other prescribed electronic modes or not. So ICAI says that there may be a practical difficulty to identify that his assessee made all the payment by account pay check only or not. So there may be a practical difficulty. And guys, where the reporting has been done on the basis of certificate of the assessee, the fact has to be reported as an observation in para 3 of the form 3CA. So guys, suppose if chartered accountant is saying that all payment is received by any mode other than cash, and on the basis of the representation or certificate from the client, then this fact has to be mentioned in the form 3CA. In the form number 3CA, it has to be mentioned. But guys, what happened in the current case? The tax auditor is required to point out in tax audit report the violation of provision of section 48(3) thereof involving expenditure to the person in a day exceeding 10,000 otherwise than by way of account pay check, account pay demand draft or ECS. However, in this case, the tax auditor has certified that there was no such instances. Those such instances aggregate of the large quantum of the 20 crore. Now, in current question, what happened? Chartered accountant says that all payment made by the account pay check only. There is no violation of section 48(3). But guys, after raid, when income tax department is checking, there is a 20 crore rupees made in the cash. Now, the tax auditor should have been considered the nature of business, that is jewelry business of the assessee, and accordingly undertaken necessary check to verify whether there is a cash payment in violation of section 48(3) or not. He should have been made use of audit tools which are available to find out such payment, that is expeditiously and accurately where the data is a voluminous. So he may use the audit tools while doing the audit and all. Now guys, this is the conclusion. Try to understand. In this case, considering the nature of business of the assessee, namely jewelry business, the onus was on the tax auditor to verify the same before reporting in the form number 3CD. Mere reliance on the certificate issued by the management is not acceptable in such a case. Also, even in case where the reporting has been done on the basis of the certificate of assessee, the fact has to be reported in the observation in para 3 of form number 3CA, which he failed to do so. So he has not mentioned in the form number 3CA also, because as per the ICAI audit guideline says that if there is a if you rely on the certificate issued by the client, then you have to mention in the 3CA form, but he failed to do so. So guys, he will be treated as guilty of misconduct here. Thus, in this case, the tax auditor has failed to exercise the due diligence in the conduct of his professional duties, and he had also failed to obtain the sufficient information which is necessary for expression of opinion. On account of such failure, clause number 7 and 8 of the part 1 of the second schedule of Chartered Accountancy Act 1949 may be invoked. So here guys, there may be possibility that he will be treated as the, here in this particular case, clause number 7 and 8 of the Chartered Accountancy Act 1949 second schedule may be applied and he will be treated as guilty. You got my point or not? Yes. So this is the question number 7. Question number 5. So question number 5 is basically income tax, as well as you should need the knowledge of audit paper also, because in audit you have studied that professional misconduct and all. Now, question number 6. Just check the question number 6. What happened here in question number 6? Question number 6 says that XYZ and Company is a firm engaged in the interior decoration business. So they are into the interior decoration business firm. Employed 20 new employee on 1/4/2022 on the monthly salary of 25,000. Is to be paid by account pay check. So here guys, this firm has employed 20 new employee and they are paying the monthly salary of 25,000 and they paid the salary by account pay check only. Now in addition, each employee was entitled for 10% employer contribution to the recognized provident fund. Here there will be 10% employer contribution to recognized provident fund. The employees were also entitled for transport allowance of 3,000 per month paid in the cash. And guys, gross total income of the XYZ and Company include the profit and gain from business is a 62 lakh. Now the firm claimed the deduction under section 80JJAA of the 18 lakh rupees, that is 30% of 60 lakh, that is 20 lakh, 20 employee multiply by 25,000 per month multiply by 12. So whatever the total salary 25,000 per month multiply by 12 month multiply by 20 employee, 30% deduction assessee has claimed under section 80JJAA. On the basis of report of chartered accountant issued in the form number 10DA. So in form number 10DA, because if you want to claim the 80JJAA, you have to audit your books of accounts and file the form in 10DA also. Now the same chartered accountant was also the tax auditor of the firm. The chartered accountant contended that the emoluments do not include the employer contribution to PF and also cash payment were not to be considered as additional employee cost. And for the purpose of section 80JJAA, hence only 25,000 per month per employee paid by account pay check was to be treated as additional employee cost. And since the same does not exceed the limit of 25,000 per month and the employee have been employed for more than 240 days in the previous year 20 to 23, the employees would be qualified as additional employees, and for the purpose of deduction under section 80AA for the assessment year so and so, in this contention is correct and examine the ethical implication in this case. Guys, what happened here? You know that they have employed new employee, and guys, their monthly salary is 25,000, but that is paid by the account pay check. Along with that, 3,000 allowances also paid, but that allowances is paid in the cash, and as well as the 10% there is an employer contribution to the RPF. Now, if you remember the 80JJAA, 80JJAA is applicable whenever there is an audit of assessee. And guys, 80JJAA says that if you recruit the new employee, then whatever emoluments or remuneration paid to the employee, 30% deduction is allowed, but there were certain conditions. First condition, that emoluments should not be more than 25,000. Second condition, that employee should participated in the RPF. Third condition, emolument should be paid, not paid in the cash. That employee should work for 240 days or more in the previous year, but in case of the leather, footwear and apparels business, manufacturing business, 150 days instead of 240 days. Now guys, here question is that whatever the employer contribution is made to the RPF as well as transport allowance paid to the employee, is that will be considered in the emoluments or not? Right answer is, guys, here 3,000 the transport allowance paid to the employee, it will be considered under the emoluments. Means it will be included in the emoluments, it will be considered in the emoluments. And guys, this 10% employer contribution will not be considered in the emoluments because this is not paid to the employee, it is basically credited to the RPF account. So here can I say that here emoluments total amount is a 28,000. So 28,000 is a employee cost. So in this particular case, 80JJAA is not applicable. Now here the contention of the auditor is not correct. Here contention of the auditor is not correct. And in the clause number, now where auditor has to report that? In the clause number 33, that is related to the deduction. 33 is related to deduction. Here he has to report. And guys, here in this particular case, deduction should not be allowed. Deduction should not be allowed. And if it is allowed by the chartered accountant, then he will be treated as the guilty of misconduct. Guilty of professional misconduct. And guys, due to the clause number 7 of the part 1 of the second schedule of the Chartered Accountancy Act 1949 may be invoked, and chartered accountant will be treated as guilty. You got my point or not? Yes, just read the answer of this question, and after that just check the question number 7. Yes, people. Now question number 7. What question number 7 says? Try to understand. Question number 7. Question number 7. All people, just focus to the question number 7. What question number 7 says? Question number 7 says that the income tax department collected some document from the ABC Bank which reveals that Messrs. Alpha Travels and Consultancy Service, that is Alpha Travels, had remitted the substantial amount abroad. So from the bank, income tax department got some information that there is one Alpha Travels and Consultancy Service, that is Alpha Travels, they have remitted some amount outside India. The document collected include the form number 15CB also. That 15CB form is issued by the chartered accountant. Chartered accountant verify the remittance. Okay, what assessee made the remittance outside India. So he always verify that, and after that he issue one form, that is form number 15CB. Issued by chartered accountant, list of passengers, copy of their passport, date of travel and invoice raised by the foreign party. But on inquiring from the passenger and verifying their passport, it is found that they did not travel abroad during the date mentioned in the document. Further, the passenger denied any sort of transaction with the Alpha Travels. Now, the department therefore concluded that the amount were remitted abroad on the basis of the false invoices and the wrong reason, leading to the FEMA violation, and that the Form 15CB issued by the chartered accountant facilitated such violations. During the 9-month period in the question, the chartered accountant has issued the 120 certificate in the form number 15CB and approximately involving remittance of 30 crore in the favor of the Alpha Travels. Now the chartered accountant submitted that he had issued the form 15CB based on the invoice produced by the company and verifying only KYC document of the signatory of the invoice. He, however, failed to bring on the record the invoices. When they asked, then he failed to bring on the record that invoices. He further submitted that since he was not a statutory auditor of the company, he did not examine the books of accounts before issue the form 15CB or the conduct due to due diligence of his business activity. He had charged 3,000 per certificate. Mostly the fees was collected in cash. Some part of fees was credited in his bank account. Examine the ethical implication in this case. Guys, you know that in the practical life, this is the in the practical life of also it's happened. Okay, many times chartered accountant issue that fake form 15CB. Chartered accountant issue, he never verified detail and all, and he issued the form number 15CB. This is the question. Now guys, whenever any chartered accountant issue the form number 15CB, then he has to understand the agreement between the parties. Okay, who is a foreign party, who is an Indian party, agreement between the parties, as well as he has to check all the invoices, as well as he has to ensure that his TDS is deducted or not deducted. So everything he has to mention that, and after that he will issue the form number 15CB. But in this particular case here, guys, auditor is going to be proved as guilty. Why? So just read it. Form 15CB is a certificate of the accountant wherein he certified that he has examined the agreement between the remitter and beneficiary requiring such remittance, as well as the relevant document and books of accounts required for ascertaining the nature of remittance and for determining the rate of deduction of tax at source. Miss TDS, he verify that. So here in the form number 15CB is a certificate of accountant, chartered accountant, wherein he certified that he has examined the agreement between the remitter and beneficiary requiring such remittance, as well as the relevant documents and books of accounts required for ascertaining the nature of remittance and for determining the rate of deduction of TDS. The chartered accountant certifying the form undertakes to have verified the agreement between the remitter and beneficiary, as well as the relevant document and books of accounts to ascertain the nature of remittance and determine the rate of TDS. In this case, however, the chartered accountant mentioned that he had only verified the KYC of signatory to invoice and invoice thereof, but he has not only failed to justify as to how verification of invoice was considered as sufficient compliance for the certifying the form, but also failed to bring on record that invoices. When they asked, then he is not able to furnish the invoices also. Thus, he failed to provide any basis on which he relied the issuing the form number 15 CV certificate to the company. And guys, on account of such failure, clause 7 and 8 of the part 1 of the second schedule of the Chartered Accountancy Act 1949 for failure to exercise due diligence in discharging his professional responsibility and failure to obtain sufficient information may be invoked, means he will be treated as guilty of misconduct, professional misconduct. Okay, done. So this all are the 7 questions. Now guys, along with this 7 question, ICAI has given 5 case studies also. But guys, this case study is very simple case study. You have to do this case study, and very simple case study, and 2 case study we already discussed through the question and answer. One is this case study number 5. This is related to form number 15 CV only. Just last question number 7. So case study number 5 is a similar to the question number 7, means same as question number 7. Now here ICAI has given some case study, and guys, here they mention that like what was the case, what chartered accountant did, and what is the conclusion. So here guys, first is a 195(6) and 37 BB. This is one rule that whenever any payment is made outside India, then there will be guys form number 37, rule number 37 BB says that form number 15 CA should be filed by the chartered accountant. Chartered accountant will issue the form number 15 CA. After that, relevant clause of the second schedule of the chartered accountant when he will be treated as professional, guilty of professional misconduct. After that, what was the fact of this case? So this case is based that here White Travels and Consultancy Service, White Travels, but in that question that Travels name was different. After that, submission by the chartered accountant says that I have just checked the KYC, but I have checked the KYC and invoice, but when they asked the invoice from the chartered accountant, he could not furnish the invoice detail. Now basis of conclusion, and this is your takeaway. So just read it, you will able to understand that question number 7 as well as this case study. So here guys, this was the case study number 5. Now case study number 4. Now what happened in the case study number 4? Case study number 4 is related to the section 80IE. Now guys, 80IE nowadays it is not applicable. It is applicable if you started the manufacturing business before 1/4/2017. So if you started the manufacturing business before 1/4/2017, then deduction at the rate 100% is available for the 10 years. For 10 years deduction under section 80IA, for the 10 years 100% deduction is available. Now guys, what happened in this particular case? You know that this company was doing one activity for the Unilever Limited. Unilever Limited is one company, Hindustan Unilever. So for the Hindustan Unilever Limited, this company is just repacking the powder, that washing powder. So question is that is the manufacturing or not? So how we will report in the audit report? So here, Alpha Packaging Service Private Limited, located in Guwahati, has been claiming deduction under section 80IE on the basis they are saying it is a manufacturing, on the ground that it is engaged in the manufacturing business. But guys, a survey conducted on the company followed by the scrutiny of the case shows that company was merely involved in the packing of washing powder of the leading brand, that is Turf, obtained from the Unilever Limited. So they are doing just repacking and giving the same back to them. Then auditor report as well as the report in form CCB for claiming deduction under section 80IE was issued to the same by the chartered accountant. Chartered accountant says that is a manufacturing. So is it a manufacturing or not? So if you will read this case study now, you will able to understand. Okay, so just go through this case study number 4. Now case study number 3 is very simple case study. What happened in this case study? This case study is on the basis of section 80IA. Nowadays 80IA deduction also not available. Guys, you know that if your new infrastructure business, now deduction is available under section 35 AD, but earlier deduction was available under section 80IA. And in case of the new infrastructure business, 100% deduction is available for the 10 consecutive year. Now guys, what happened? You know that in this case study, chartered accountant has given the deduction. Chartered accountant says that okay, 80IA deduction is available. But after some time, chartered accountant realized that oh, that 10 years is already expired. So chartered accountant just withdraw his tax audit report. Chartered accountant just withdraw the audit report. He withdraw the audit report and he says that no, deduction is not available. So is chartered accountant will be treated as guilty or not? Answer is no. In this case, chartered accountant will not be treated as guilty. So this is the case study number 3. You will study, then you will able to understand. Now guys, case study number 2 is very simple, and this we already did. This is related to the that jewelry business raid is conducted. In case of jewelry business, that payment of more than 10,000, huge payment is made, but chartered accountant did not verify. Chartered accountant just rely on the statement made by the management, but he has not mentioned in the 3CA. So that same is a case study number 2. We did one question, that is same case study number 2, and case study number 1 is also simple. Just read the case study number 1, you will able to understand. Okay guys, so this case study in your homework, just read it and just analyze that, because here for the tax audit purpose you should need the knowledge of the audit paper also little bit, and after that income tax provision. Okay, done. So this is the completion of your topic tax audit. So we have completed tax audit. Now guys, your exam is near May and November 2024. Just study hard, give your 100%. I always says that give your 100%. ICI will give you 50%, and we need only 50% to crack the exam. So see you after becoming chartered accountant. Whenever you complete the CA, just visit the Mumbai. We'll meet and we'll party, we'll celebrate your success. Thanks a lot people. Bye, take care.